Good afternoon, good morning, good evening, everyone, and welcome to Diary of a Trader. This is another video in our series, and in this video we're going to be talking about dynamic impulse trading. Dynamic impulse trading is another name given to something that's referred to as price action trading, or naked trading. It's a style, or really just a style of trading that basically does not use really any type of lagging indicators or very few indicators. Some people may use some type of broader long-term moving average to establish a baseline trend. And most though do not, but otherwise the tools that you are limited to using, depending on how much of a purist you are only going to really use horizontal lines on the chart to establish areas of support and resistance. So you will probably use a couple of these to determine, you'll look at past price action and say, okay, well, here's a swing high here, and you may put some more horizontal lines in different areas and so forth. And you'll break it down into smaller time frames. But the problem is when we talk about dynamic impulse trading, the problem is that it is a price action style trading system that does not utilize of any type of lagging indicator or indicators. The problem here is that when you're using candlesticks, you're looking at a kind of a three-dimensional chart. Okay, so you're looking at a chart style that has a time, price, and volume based measurement. If you're going to be doing some type of dynamic impulse trading or price action trading, you should use a chart that is dedicated to price action only. And so one of the purest chart forms out there for price action trading or dynamic impulse trading is a point and figure chart. Point and figure charts are very old school, but they are an extremely important and an extremely efficient and powerful and profitable chart style. You'll notice here that this may look a lot different from what you're used to if you're used to looking at candlestick charts only or American bar charts, that this style looks a little weird. You see a lot of X's and O's, and the point here is that point and figure charts, there is no time or volume component. Okay, so the down below we have the months and the calendars and calendar days and such. That doesn't matter. There is no time or volume component involved. This is about as pure a form of price action or dynamic impulse trading that you could ever come across. There are other styles of this price action only trading. Some of that would be, volume based, tick based charts. Renko is probably the closest, but point figure for me is the best. And for somebody, when we're talking about price action trading, dynamic impulse trading, a lot of those styles are based on the interpretation of a candlestick for a breakout. The problem with that is if you're not introducing a volume and if you're using a time-based chart, you should be using some type of lagging analysis. Thankfully, with point figure charts, we don't have to do that. So one of the things that's important with any type of price action trading or dynamic impulse trading is that we're going to be looking at primarily on a price action only chart. This is all breakouts. Okay, this is all dealing with the breakout levels of certain price ranges. And on a point and figure chart, the only time that we ever enter a trade is when there's some type of multiple top or bottom broken. So for instance, right here, we can see that there's two X's. Now X's represent movement higher, so like prices moving up, and then O's represent a price moving down. Point and figure charts are also represented by they're constructed according to a certain box size, and so each X and O is represented as a box, and that has a certain measurement. So this is the pound dollar, and it's a 20 pip chart. It's a 20 pip point figure chart, which means that each X and each O represents 20 pips of movement. And there's a reversal amount too. The reversal amount is 3. That is a 3-box reversal. And so that means, when price was trading up all the way to this X, when prices reverse, what happens is it will not print the next column of O's until price moves 3 boxes worth of price below the last X. So here's the last X. When price moves down about 60 pips, then it prints a new column of O's. And so some people may be saying, well, how come there's not a time component involved in here? Because it seems like things do switch. There's not a time component in as far as we measure things in minutes or hours or months. We're just measuring price action. So what is printed here on the screen, when you go from X to O to X to O, you're showing reversals, all right? You're seeing established reversals occur. Now, to the point of the price action component, the trading side of this is when price breaks some type of multiple top or bottom, that is when we enter. So for instance, right here on the pound dollar, we have this column of X's, these O's showed up, and then this printed. Here's this double top that formed at 120, or what is this, at 126.80. Where's the entry? The next X above. So at 127 even, that would have been the entry. And that would have yielded potentially 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times 20 pips is 220 pips worth of potential profit, hypothetically, all right? Now, part of the problem that some people may have wrapping their head around the idea of using a price action only chart is that you when you're looking at a candlestick chart, okay? When we look at a candlestick chart and we're talking about breakouts, we know that things, when they break out on a candlestick chart, that things fail, they get rejected all the time. The point is on a point figure chart, because price action is the only thing we monitor, we only care if price has generated enough movement to commit to that change. All right. So if we were to actually kind of look at them side by side, okay. So the chart on the left is a 20 pip 3-box reversal chart, and then we have the chart on the right. This is just an hourly chart of the same instrument. So this is the pound dollar over here, and this is the pound dollar on the right, point figure chart. So we can kind of get an idea of where something is at in relation to the date. If I put the months on here, then I can see, okay, well, there's where it was at in October. So let's actually kind of delineate these zones here and say October of 2019. That was you were trading what there was around 122.80 in October. Roughly around, we'll just say right around there. Okay, so that is basically what I'm saying is all this activity in the point figure chart to the right of that green line on the left chart is the same as all the price action over here. Okay, structurally it looks pretty similar, but here's the issue. So let's identify some breakout zones that occurred from double bottoms. So we have or rather a double top. So we have a double top at 124 even. 124 even, there was a double top. Then we had another double top at 126.80. Okay. And then we had another, well, we'll just do these two for now. All right, so when we're looking at the hourly chart, this looks like a pretty easy trade, right? Is it though? How many times would have you stopped out or thought that prices were going to trade up and you started to break that, you started to take the breakout here, or you thought it was going to break above, but you actually went short here instead? The point figure charts, the price action only charts, provide a much more efficient, a much more powerful, and a much more accurate style of trading for those who want price action trading or if they want to use dynamic impulse trading. Learn point and figure charts if that's what your intention is, because if you're going to trade price action, you might as well use a price action chart. Thank you for watching this video, and I look forward to speaking with you in our future videos.